What's up, YouTube? This is Michael the Entrepreneur coming back at you with some more entrepreneurial content. Today, we are going to be talking about cash flow. Let's go. So, you might be asking, cash flow is just money. It's just the measure of money, right? No, it's a little bit more complex than that. And you as a business owner, if you want to understand what money is, if you want to up your financial literacy, very important that you understand and master the art of managing money, managing cash flow. Cash flow is the measure of money that actually goes in and out of your business, but especially money that actually affects your bank account. Now, there are other types of financial statements such as, your balance sheet or your income statement. And on an income statement, there are places in there where you talk about the cash flow or you talk about money that's coming in and out of the business. But the difference between an income statement is sometimes you can log, or most times you can log money or accounts that has not exchanged hands yet. So it's very important for you to understand the difference between that. So when you were thinking about the amount of money or the amount of cash that is coming in and out of your business, you want to look at your cash flow. There are 3 different types of cash flow categories. The first one is going to be operating, or CFO. The second one is going to be investing, and that's CFI. And the third one is going to be financing, and that's CFF. Let's talk about the first one, and that is cash flow from operating activities. And essentially, this is the money that is generated through sales minus the amount of money that you pay to your vendors or the cost of goods, also to staff. Then after that is going to be any type of loans that you're paying on. And then last is going to be the taxes that you give to the government. So that is going to be your CFO. Typically, when you're thinking about a CFO, if there's a rise in the CFO, that means that the business is growing. Or if there's a downward slope to the CFO, that means that's a shrinking business. So now let's talk about CFI, or cash flow from investing activities. So this one's a little bit different, but this ultimately is the measure of cash that is going into things that you're doing to invest into your business. Typically, a CFI tends to be negative because that means that you're spending money to grow your business. So you're either buying furniture or equipment, or you are acquiring another business, or purchase of money market investment, so that you're investing in stocks through the business. There are times where the CFI can actually be positive. And typically the way that happens is 2 ways. Number one, you are actually selling assets of the business, and that will return you a positive in your CFI. Or the other way is if you are acquiring another business and there's cash that is given through that exchange. So that would automatically result in a positive cash flow in the CFI. Now let's talk about cash flow from financing activities. So typically the CFF is money that is going out to investors. Okay, so anyone that has, equity, or they put, money into the business, you have a loan, banks, things of that nature. This is where all that money is going out. This is also where you would log any type of membership payments or dividends. This is where all that would go to. Typically, if you have a positive CFF, that means a business is raising money. If you have a negative CFF, that means a business is paying out money. And lastly, there's also one more honorary member of the cash flow statement, and that is going to be free cash flow. And this is very, very, very important to future and potential investors in your business, because this is the measure of how much money that you have that is free of any obligation. And the way that you calculate this is you take your CFO, operating cash flow, and you want to subtract that from the long-term money that is obligated to your long-term investments. So that can be equipment that you're paying on, leases, things of that nature. So you take those 2 costs, and any money that you have left over from that, that's going to be your free cash flow. And the good thing about having a positive free cash flow is that means business is able to, self-fund any growth initiatives. They don't have to borrow money. They can just do it on their own. So it's really important when you want to measure the amount of free cash flow that you have in your business. Now that you know the 4 ways that cash flow is categorized, you should know that all of this information goes onto a cash flow statement. So I'm going to give you an example. We have 2 businesses. We have ECG Graphics and Printing, which is my business, and then we have one of our competitors, which is Graphics on Tees. Both of our businesses for last year, 2019, reported that we made $3.2 million for our business. Now, one would say, based off of that number, both businesses should be equal when it comes to their financial strengths. But that is not true. So let's look at the cash flow statement of ECG. If you look at their CFO, you'll see that they generated enough cash to be able to fund their investments and also pay back in dividends to their investors. Now, let's look at Graphics on Tees. Their cash flow statement is a lot different. You'll see that they weren't able to generate enough cash flow through their operations, so they had to use their investments, which they took out a lot more in their investments, to be able to fund the other things within their business. So basically, they're spending more money than they are making. So eventually, they are going to have to look for investors or look for more money to be able to fund their operations. Now that you've seen that, even though they both reported $3.2 million, they're very different, and you can actually see that ECG is in a stronger financial state. If you like what you've seen today, please check out this next video. I'm happy to have you guys on the channel. If you have not subscribed, please subscribe. Hit that notification bell so whenever I drop some new entrepreneurial content, you are notified so you can grow as an entrepreneur. Thank you guys. Let's go.